Hey, what's going on everyone? Lewis here. In today's video, we are going to take a look at the Sacramento market and we're going to try to determine if it's a good market to invest in real estate. We're going to look at some of the unemployment numbers. We're going to look at the population growth. We're going to look at median home price, price appreciation, where rents are. We're going to dig into some of those details and try to figure out if it makes sense to purchase rental property in this market today. Welcome to Macro Thinker. If you are new to the channel, please consider smashing that like button right here to help push this content out to more people. And if you haven't done so already, please tap the subscribe button to see more weekly videos on finance, real estate, and investing. My name is Lewis. Let's get it. Okay, so we're going to jump right into some of the trends and market analysis for Sacramento, California. And up on the screen, I have an article by Than Merrill, which is a pretty famous real estate investor. What we're going to do is go through the article that he provides here. We're going to highlight some of the things that I think are really important, and then we're going to dig into some of the details. This article says that the Sacramento market owes a great deal of its recent success to its neighbors. And of course, they are referring to San Francisco and San Jose. Now, these areas, if you are not familiar with these areas, they are very expensive, large metropolitan areas that are very heavily populated. Many starter homes, you know, your standard 3-bed, 2-bath, maybe 12 to 1,500 square feet. Some of them are $900,000 to $1.5 million. Since the pandemic, what has been happening is a lot of employers have been allowing people to work from home. So people that are living and working in these areas that the cost of living is so high, they are fleeing to areas like Sacramento, California, where the cost of living is much lower and they can still work and be close enough to where if they need to go into the office in San Francisco or San Jose, they're only an hour and a half to 2 hours away. He provides a pretty nice overview, and we're going to dig into some of these details as well. So up on the screen, it shows the median home price in Sacramento is now sitting at about $400,000. That is up 12.5% in just the last year alone. So in other words, home prices a year ago, pre-pandemic, were sitting right around a median price of about $350,000, and now they're sitting closer to $400,000. And then the average days on market is sitting at approximately 17 days. Now, I can tell you from experience that if you price a property correctly in this market and you're in a good location, your home is probably not sitting on the market for even 17 days. Right now, with the inventory so low and the buyer demand so high and interest rates still at record lows, you're probably getting multiple offers inside of a week and getting that property sold very, very quickly, probably well over your asking price with some very good terms if you are a seller. If you're a buyer, it's actually very tough to get into contract right now. And so you have to get really creative and you have to be really quick to act. It says the median rent price here is $17.95 with a price to rent ratio of 18.55%. Now, for those of you who do not know what a price to rent ratio is the ratio of the home price compared to the annualized rent in a given location. This ratio is used as a benchmark for estimating whether it's cheaper to rent or to own. To calculate the price to rent ratio, you would take the median home price. Sacramento's case, it is around $400,000, and then you would take the annual rent. So if the monthly rent is $17.95, you'd multiply that by 12, and you'd have an annualized rent of about $21,540. So you would take $400,000. Divide by 21,540, and that puts you at about 18.57%. That is your price to rent ratio. Now, according to Trulia, they've established a threshold as follows. Price to rent ratio of 1 to 15 indicates that it's much better to buy than to rent. A price to rent ratio between 16 to 20 indicates it's typically better to rent than to buy. And to be clear, that's where the price to rent ratio for Sacramento falls into place. And then the price to rent ratio between 21 or more indicates that it's much better to rent than to buy. And of course, they're just indicating what provides the most value. So whether it's cheaper to rent or cheaper to own. Now it says here that the unemployment rate is sitting at 7.9%. To me, that still seems pretty high. I pulled up a chart from the St. Louis Fed showing the unemployment rate in Sacramento County. According to this chart, unemployment's actually slightly higher in January of 2021, sitting at 8.1%. This is actually a pretty big number, guys. If you go back and you're just looking at this chart, the chart dates back to 1992. You can see the different peaks and valleys. But if you look pre-crisis levels, like prior to the great financial crisis starting in 07, we were sitting at an unemployment rate of around 4.85%, somewhere in that range. And then going into the pandemic here prior to March of 2020, we were under 4%. After the lockdowns starting in March of 2020, we saw a major peak, major spike in unemployment, topping nearly 14.5%. And then it's kind of come back down and normalized a bit, but 8.1% is still not what I would consider a low unemployment number. So this is something really important to watch. Now, speaking of unemployment, I've actually found a really fascinating article on Yelp.com where they provide economic data on what is going on with small and medium-sized businesses. And it talks about which businesses were hit the hardest, and it also breaks down the information by state to show where we saw the most business closures. So up on the screen, I have a chart off the Yelp.com website, and it indicates which sectors lost the least amount of businesses and which sectors lost the most amount of businesses. And if we look at the blue side here, it says home, local, professional, and auto services businesses have been staying afloat. And over here, it shows that 1.6 per 1,000 businesses were closed. So in other words, they're referring, the number that you see here is how many business closures took place amongst 1,000 similar businesses. So for lawyers, they lost 1.6 businesses per 1,000. Architects, 2 businesses per 1,000. Contractors, 6.6 businesses per 1,000. And so on and so forth. So you can see auto repair 9.1, landscaping 9.5, roofing 9.9. Overall, that is not terrible. It means these sectors are still staying pretty strong and in some cases thriving. But if you look at the red side, the restaurants and retail businesses have been struggling by far the most. Women's clothing, 24.2 businesses lost per 1,000. Pizza businesses, 25.8 per 1,000. Food trucks, 28.1. Home decor, 29.6. And so on and so forth. Trend that you'll see here is that certain department stores and food, they got hit the hardest. Now, what's even more fascinating, it breaks down actual business closures by state. And if we're looking at the closures by state, look who got hit the hardest. California. So it says here that California had 19,000 permanent business closures, and they had almost 20,000 temporary business closures, which far exceeds any other state. Now, I'd imagine that a lot of this has to do with draconian-style lockdowns and heavy regulation because of the pandemic. The sad part is we just don't know if this is going to continue into the future or if the worst is behind us. And I would venture to guess that some of these temporary closures may become permanent closures, which is going to further contribute to the unemployment rate here in the state. Now, keep in mind, this is not specific to Sacramento. This is specific only to California, but it's really telling to see where these numbers land and how they stack against these other states. So the population is currently sitting a little bit over 1.5 million in Sacramento County. And I wanted to dig into this a little bit deeper, so I went to another chart by the St. Louis Fed to pull up the data on Sacramento County and to see if we've seen population growth over the last few decades. And as you can see up on the screen, this chart dates back to 1975, and we've seen a pretty steady trajectory of growth here over the last 30, 40 years. So this data only represents the growth up to 2019. We're sitting at almost 1.6 million. And what I could not find was whether or not we've seen more growth since 2019 or less. And I would be really curious to see if we're sort of rounding out and plateauing a little bit. My guess is at this point we are not, because we are seeing migration in from areas like San Francisco and San Jose. Now we have median household income sitting just above 67,000 according to the US Census Bureau. I went ahead and pulled up another chart from the St. Louis Fed for Sacramento County specifically, just to try to confirm this data. Unfortunately, it only goes to 2019 as well, but it shows that the median household income is actually slightly higher in Sacramento County, which is really good. We're at about almost $72,000, and my guess is that over the last 2 years or so, we've probably seen that increase ever so slightly. This also says that percentage of vacant homes, I was not sure how to find that data, but it's saying it's 8.93%. That seems really high to me. So of all the housing stock, single family housing stock, almost 9% of them are sitting vacant. And so I don't know if that includes maybe foreclosures or bank-owned properties or just vacant rentals, and they're factoring vacancy factor, but that seems like a pretty high number. And then the foreclosure rate, they're saying 1 in every 5,200 homes are struggling with foreclosure. That's about 1.9%. So that is not a massive number. It's not the worst you'll see out there, but it's not the best either. So the article goes on to give the Sacramento real estate market forecast for 2021, and I'm going to highlight some of the key points here. So let's go through it real quick. As the capital of California, one of the hottest statewide markets in the country, Sacramento has received some significant tailwinds. Despite the pandemic, the Sacramento market appears to be thriving. Most notably, Sacramento's latest success appears to be due to its proximity to other thriving cities. Of course, here they are referring to cities like San Francisco and San Jose, which are only between an hour and a half and 2.5 hours away. And it's received some added attention because of that. For what it's worth, nearly a decade's worth of appreciation has culminated in the exodus from larger cities to smaller cities like Sacramento. So people are migrating up. And actually, one little interesting tidbit that I found to support this was U-Haul migration trends in 2020 actually named the Sacramento and Roseville, California area the number 11th growing city in the country. Article goes on to say that the added attention comes at a time when more and more people are working from home. At the very least, fewer people need to live close to an office, which gives them the freedom to look for cheaper alternatives like Sacramento. When all is said and done, it's fair to say that Sacramento will receive a lot of extra attention this year. The demand will most likely continue to drive prices even higher, at least until more inventory can be brought to market. Because right now the housing inventory is sitting in many cases at under 1 month's supply. In the meantime, prices will increase in line with supply and demand. So simple supply and demand economics here. Inventory constraints will also spill over into the rental market as well. With the price to rent ratio over 17, it's usually more affordable to rent a home in Sacramento, which means the rental market is already a bit frothy. However, the lack of listings has prevented would-be buyers from participating in the market. Ultimately, those who aren't able to find a home to buy will be relegated to the pool of renters, which seems to be increasing by the day. This article also talks about real estate investing here in Sacramento. It kind of reiterates what we just talked about regarding San Jose and San Francisco. Because of the close proximity, people are looking for cheaper alternatives, and they're turning to places like the state capital, so Sacramento, California. And it goes on to say that 2 years ago, this was actually considered the country's 19th hottest market. While real estate in Sacramento is more affordable than its neighbors, prices are still well above the national average, so much so, in fact, that rehabbers are finding attractive profit margins harder to come by. Prices are higher than ever, which begs the question, will house prices go down in Sacramento? So this is 100% true. If you are a rehabber or you are a flipper and you're trying to buy something to flip in this market, chances are you're struggling to get under contract and get a deal with enough margin to turn a profit. And with prices higher, it means that you're going to be risking more capital to have a smaller reward, which could be very risky in this market if the sentiment is to shift and prices were to come down or more inventory comes online. Home values most likely won't drop anytime soon in the Sacramento housing market. All of the attention the state capital is gaining is simultaneously driving up the demand and the competition. The added attention has enabled homeowners to increase asking prices for the better part of a decade. Now that the pandemic has cut into local inventory supply, prices should rise for the foreseeable future. One last thing that I want to highlight about the shortage of inventory is that home builders are not necessarily jumping out in front of this market trying to build homes to satisfy the demand. In fact, I pulled up an article online that it shows the percentage of new permits that are filed for not only single-family homes but multifamily construction. Have that up on the screen, and you can see that single-family is sitting at about 6.3%, multifamily is at 7.6%, and both have actually trended down in the last year or so. And I think a lot of that has to do with the rising cost of materials. Lumber is nearly 3 times more expensive than it was a year ago. And then the regulations in California for building are very strict, making it difficult to eke out a profit. And of course, the cost of labor is increasing as well. Okay, so now we've actually looked at some of the data. We know that the population in Sacramento County is staying stable, if not probably growing a little bit. We know that the unemployment rate is a little bit higher than where it probably should be. We don't know how that's going to shake out necessarily, if it's going to continue to get worse or ideally gets a little bit better after kind of the dust of the pandemic sort of settles. We know that there have been massive amounts of business closures here in California. I don't know whether or not that's going to get worse. So there is some uncertainty in that market here. But on the flip side, we know that buyer demand is insanely high. We know that inventory levels are very low. We know that home builders are not necessarily coming in to fill that buyer demand right now. They're doing it at a modest pace at best. And we know that if you are a home flipper, essentially you're trying to buy a home, fix it up, and flip it at a profit. We know that the margins are getting squeezed due to the high prices and the buyer demand right now. So you're putting more money at risk for a smaller potential profit, which is becoming riskier. So the question is Sacramento market a good area to buy and hold real estate as a rental property? And my personal belief is that you should proceed with caution at this time. We have home prices sitting at record highs. The price to rent ratio is indicating that it may be cheaper in some cases to rent versus to buy. So what I would say to anyone who is a home buyer, a potential home buyer, or a real estate investor that is looking to buy and hold property for the long haul is I would do exactly that. I would look at a 10-year time horizon, if not longer. I would seek a property that you absolutely love, something that you can see yourself holding for at least the next 10 years. In other words, I would probably shy away from flipping property at this moment, given the environment that we're currently in, unless you know you can get a really, really good deal on a property. And I would stick with buy and hold investing. And I would be looking at putting a little bit more money down so you can improve your equity position. And if you cannot turn it into a rental property right away and get the numbers to cash flow from day one, I would consider looking at buying a primary residence in an area that you love. I would put the amount down that you feel comfortable with. I would keep a little bit of reserves in the bank to weather any sort of storm or market fluctuations that we could see if the unemployment rate continues to rise or the economy weakens a little bit. And then on a positive side, because the demand is so high, not only for housing, but rental housing, I would say that even if you buy a property to live in today and it wouldn't necessarily cash flow from day one, that rental demand is pushing those rental rates higher. And then over time, inflation will take the prices up. It will take the rental rates up. And over the long haul, you should do very well. Now, I wouldn't bank on that necessarily, but it is something to really consider. I mean, the trends are there. We have lots of people coming up from the Bay Area and are coming up this way to flee the more expensive areas and seek affordability here. Sacramento is a great location. It's centrally located. We're close to a downtown metro area, which has great nightlife and lots of amenities. You have rivers and lakes. You're close to Tahoe. You're close to the Bay Area. It's just a really beautiful area. All right, so that is going to wrap it up for today's weekly market review. We talked about the Sacramento market and whether or not it was a good area to invest in real estate. I absolutely love making these videos. It takes a long time to put the data together. So if you stayed till the end of this video and you haven't done so already, please consider smashing that like button, tapping the subscribe button to see more weekly videos on finance, real estate, and investing. I really appreciate you taking the time to watch this video. I hope you found it useful. Leave a comment below if you have any questions. Thank you so much. Take care.